Hey, good morning, everyone, and welcome to Thursday's morning's edition of our pre-market prep. And the question here that I would like to answer or at least discuss is what is the VIX? The VIX has been something that we've been talking about here on a pretty regular basis for the past week and a half or so, and because it has played a key um, key point in what the markets are doing, and we'll discuss that a little bit. But before we do, let's jump into some basic housekeeping and disclaimers and all those good things. So, if you've been following me, you know and understand that I am not a financial advisor, nor do I give financial advice. And should anything I discuss here, part of my video, should not be misconstrued as a suggestion to make a trade or to buy or sell any particular stock or security or ETF or even option for that matter. Stocks and options both have risks, and neither one may not necessarily be suitable to your type of investment. With that being said, these videos are part of my trade journey. They're part of my trade journal. I record them. Allows me to discuss and talk about what I see in the markets. I try to give a little bit of education, a little bit of some things here, maybe from an entertainment value standpoint. With that being said, I trade my own money. I'm an older trader, so I'm rather risk adverse, and I don't like putting a lot of money at risk. We look to make relatively high probability trades, is what we work on, and obviously try to keep the emotions out of trading, which that in itself is a full time job. So, with that being said, let's jump into the markets. We had a great day yesterday. Actually, the last few days, the markets have been kind of basing around some key levels of support. It did on Monday. And everything we saw, and then even Tuesday for that matter. But Monday, we saw a huge drop in the market and a huge sell off. And it was like a falling knife, a hot knife cutting through butter. They just sliced through the key levels of support and everything. And what causes that is the volatility, which is the VIX. The VIX spiked up and went up to over 26. And it has stayed there pretty much above the 22 or 23 line for quite a while here. And then on Monday, it actually spiked just under 23. So or I'm sorry, 29. Let's jump over into the VIX on our chart, and so we can take a look at a little bit longer time frame of the VIX. And as you can see here, we can draw kind of a line in the sand right up here close to 29. And, typically when we get up there, we pop and we don't stay there for very long. And the VIX will have a tendency to subside and the volatility will drop. When the VIX goes up, prices in the market come down. Then that is the amount of fear that's in the market. That is the amount of selling and things that are taking place. The market, I would say, is looking for liquidity. It's going down and triggering key levels of support where people have their stop losses, and it triggers more selling, and then that causes more people to jump in and choose to sell and close out positions and things like that. Some of this was led into we had on the 17th of August, we had our SPX or S&P contracts. They had to roll their contracts, so that means closing, and then we also had monthly expiration on option contracts. So with that being said, you had a lot of with all those things, and coupled with the Fed announcement yesterday, there was just so much going on in the market, and so brought in a lot of fear, which then that is reflected in the VIX. And then the VIX has been dropping the last few days, and we have now, since over in the overnight session, we have gotten down below 20, and that is, we want to get below 20, and then but we'll see if we can drop that even further. We can take a look at that here a little closer on the daily chart. So we see the pop way up here on our daily chart, like I said, just below 29, and we have steadily come down. We've gapped down overnight, and we are showing and reflecting right here about 1965, roughly right in that neighborhood. We got a sell signal on the VIX, so that's a good sign. So we need to bring the the VIX down and get down below the 18, and then preferably even below 17 into 16, and then we're really going to see this, I would say, this bull rally and the rally in the markets to probably continue. And how soon we get back to our all-time highs, that much I do not know. When we take a look at the VIX on the intraday, on our 4-hour, 2-hour, 30-minute, and 15-minute chart, what I pointed out yesterday was yesterday on the 4-hour, our 21 is making a turn to the downside, and also our 2-hour is reflecting the same thing. On the 2-hour, we are getting a aim. We did not fire yesterday or overnight. We are getting a new signal, so possibly could be reaching a level of exhaustion here. On our 30-minute, we got a fire to the upside, so we may see a little bit of spike in the volatility here this morning, which would indicate why we're seeing a drop in our pre-market pricing in the S&P. I don't think this is much to be alarmed about anything. We got the Fed announcement behind us. I know we have the government shutdown, debt ceilings, all these things looming on us and the economy. But as always, it's a political game. They will play their games and do what they need to do. So we'll see if we can hold this 20 line as support or as resistance and not get above that. That would be a key factor here. So we got on our 15-minute chart, we got a fire to the upside. So we bottomed out here around 19, roughly right around 19, and we've pulled back up to just a little over 20, and we've pulled back. So we're getting a red ready, which means we probably are going to run out of steam here on our 15-minute and go to the downside. So this is just the market and the VIX doing what it does. And so if we continue on this pace, then looks like today could be a pretty good day. And moving in the right direction. So is this the time to start putting on longs, start to look at, opportunities? I would say yes. But at the same time, because of seasonality and the September and October typically are not always great months, what I would probably be doing for myself is looking at positions in the indexes, but probably be looking at credit spreads, and because they're a little more forgiving, and then giving myself the gift of time in case we get a pop in the VIX or we get some directional. So we've got some time to make that up. Short-term trade, one day to make, same day trade. Want to be real sure where we're at and time that right. So with that being said, let's jump into the rest of our pre-market prep. So now we kind of have an understanding of the VIX and how it might affect our trades. So when we look at the Dow again extremely bullish on the weekly chart, and we pierced the 21, got down to -1 ATR, and we've done that before. Here's let's put in some circles to identify these other points where we've hit the 21 and we've pierced it and come down. And then we get a bounce. This right here would have been, this was the pandemic. This was a year ago, March. So a year and a half ago. So, we're not going to really this was an unprecedented time, and nothing that we're going through right now will show that. So, these are some key levels of support that we want to recognize in the market, and so we've kind of got these key levels here. So we're going to um, look at these here on the Dow. So if we can continue in this mode, this is a good area. And so I would say we've got a buy signal, and on our daily. We don't have one on our weekly yet, but I'm going to probably venture to say that's going to probably come, if not probably next week, if we continue on this pace. We still need to get above the daily 21 and above the daily 50. Our EMAs are not stacked positively, but they are stacked on our long-term time frame. So right now, with the markets and the way our daily time frames look, some charts look really, really messy on the daily, but go over to the longer time frame, the weekly time frames and the monthly time frames, and make sure that the structure is still there on the longer term time frames. Because with what we've been through for the last couple of weeks and the downturn in the market, pulling back roughly 5% or better, it's it, it the some charts look really, really ugly with lots of gap downs, gap ups, gap downs, and so really a tough chart to trade. So come over to the weekly chart and make sure it still holds structure, which if we see right here, and on the daily, we've got down to the 3 ATR. So, we basically are playing a reversion to the mean, and I think it's going to revert to the mean. And then once we get up here to the 21, might be an area to be kind of cautious in, and to make sure the reversal is in, that this is not a trend, that we broke trend here on the daily, but our weekly, we haven't necessarily broke trend. And so the trend is still intact on the long term. But again, if this rejects on the daily, then we could go back down, and then on our weekly chart, our trend could be in jeopardy. Let's take a look at the Russell. The Russell is one that's trading in an extremely tight zone on the weekly chart, and it has been since the last March, February, March. So it's been trading in this zone of roughly 2350, we'll call it, down to 2100. And we've been trading in this pretty tight zone and kind of consolidating, but and we've been in a weekly squeeze during this whole period of time, and it's just a bunch of chop. So we're right in the middle right here, and I would not necessarily be putting anything on the Russell right now. We're just above the 21. We didn't close yesterday above the 21 or the daily 50, but we are just at the 21 and above the daily 50, and we are getting a buy signal here to the upside. Not a whole lot of upside. I would probably look at, if this would be a play on the Russell, probably looking at about a run to 2300. So, 70 points roughly that you might be able to capture, and that would give you about a 1 ATR move from where we're at here to possibly, you might squeak out to a 2 ATR move, which, all in all, so you risk down here at -1 to maybe capture a 1-to-1 to possibly a 2-to-1 risk of reward. And that's what I would probably be looking at on the Russell if I was to play that. Then on the let's take a look at the S&P, and as far as the S&Ps are concerned, I've put in some of these fib retracement levels here, and so we put in the lows with this high, so we've got some pullbacks. The retracement, it's respecting the 61.8, the 42.88, and we caught support here at this level right here. It kind of broke down a little bit below that support level, but we found that we are just approaching the daily 50, and we are still below the daily 21. Our EMAs are not stacked. We're roughly 10% away from our all-time highs. So that's a positive thing. Our ADX is red, indicating this is a bearish trend on the daily. So we need to get back above the 21 so we can establish our daily trend. Our weekly trend is completely intact, just as with the Dow. We will find these moments in time where it respects the 21, and as far as support is concerned. So we find these times in these moments where it's done that time over and time again. So our trend is still intact from our weekly standpoint. And again, this was the pandemic, so we're not necessarily going to look at that. But right about here is where the trend was established, and at the daily 50 and the 21, and from there the trend has been intact all the way up, and we pierced the 21, but we haven't broke below it, closed below it. So our long-term trend is still in play. The VIX has affected all this over the last, we're 3 weeks into this downturn. So it could take us a couple weeks, a week or two to get back up here. Remember, stocks fall much faster than they go up. So 3 weeks down could take us 4, 5, 6 weeks to get back up here, possibly. And so we'll see. I don't think it's going to be an easy road back up, but the VIX is going to play an important part, which we just now got back above 20 on the VIX. So when we look at that, the S&P, so when I got up, we were pushing about 34, a plus 34 ticks on the S&P. Now we're just around 20, but the price has gone up just a little bit because we broke back down below the 20 line on the VIX. So this is good. That 20 line is going to be very, very important. So we need to hold that, as far as, we need to fail at the 20 and not go much above that. If we get a spike in the VIX back up to 21 to 22, or or above, above our green line here on our chart here, then we're going to see this fail at the daily 50, and so, but I would still like to see this close above the low of the high day here. So I would like to see this candle close above that, so we can keep our trend intact as far as our reversal here. But I don't think that we're out of the woods yet. Because again, you have to consider the seasonality. September, October, there's still government shutdown looming, like I said earlier. So with that, let's jump into the Qs. The Qs, again, same type of process here. We respect the 21, and it's going to hold that 21 as a support and resistance. And so we need to understand that this is part of the game on the Qs. And so time and time again, we can see where it's held the 21. So our uptrend is still intact, even though this it can be kind of ugly. So on the daily charts, they look rather ugly. So revert to the longer time frames, the weekly time frames. Maybe look at a 2-day, 3-day time frame on the daily chart and a weekly chart, and it'll clean the charts up a little bit and establish and give you a better outlook as far as the trend that you're looking, especially if you're like me, a swing trader, and you play trades for 3 to 5 days up to 30 to 45 days. So that's kind of what I look at. So this is very important to make sure that we're holding the trend. So when I can get when my daily chart on the index or the stock that I'm looking at lines up with the overall market, then that is a good area to look at, and get into that and play based on that information. Then keeping in keep in mind that the seasonality. Keep in mind that we're not out of the woods. If the Qs reject the 21 here and we don't close above it and we reject and fail, then look at this to go lower. And but again, still want to hold this support at 15,000. And again, our VIX is popping here again, just above the 20. So we're kind of bouncing around between 20, low 20s to high 19s. So nothing, I'm not worried about that. I expect that to kind of happen. And what's really going to be watching the VIX and our ticks very, very closely at the open of the cash session. So we're still a few hours away from that. So we'll look at that when that time comes. So with that being said, hopefully you have a better understanding how the VIX works, or at least how I use the VIX, and I use it to watch the markets to determine where things are going to go. But at the same time, it's just a measure of the fear that is in the markets at the time. And it's pretty much real-time data, and so is our ticks. And so it's not really delayed. And so you can get really, really down into the numbers and of what is maybe happening with the indexes, and how the stocks may perform overall. And just remember, rising tides raises all boats. But also, when the tides are going down, like to see those boats. I like to see some of those boats, and we call them honey badgers, that like to still ride on a high tide and ride the waves. And that's what we kind of look for. One's looking to buck the trend really that's going. So with that being said, have a great Thursday. Happy trading to everybody. We will talk to you tomorrow.